It's a great honor to welcome you all to this beginning of a two-day conference of the annual economics conference of the EIB. But of course, let me say before I go any further that none of this would have been possible without our partners from SWERF, from Colombia and from OECD. So I want to say thank you very much to all of you. I guess it's good morning to some of you. It's good afternoon to others. It's good evening to some of you if you're joining from Asia. And that, of course, is the beauty of this digital event. There isn't a lot to celebrate about the fact that we're all on digital these days. But I guess it is that it means that we can get together in a way that perhaps doesn't cost us so much money, doesn't cost us so much in terms of stamina, and maybe doesn't cost the planet so much either. So I think that's relevant to today's discussions, where we are talking about digital, we're talking about green, we're talking about how to get to that carbon neutral future for Europe, while at the same time creating a more competitive and a more inclusive society. And of course, we're talking about all of these things in the context of the COVID crisis. And that's what is going to really drive our discussion over the next couple of days with a really, really exciting group of people. I'm not going to name them all, but you'll find them on our conference site. And of course, we're going to be giving you the highlights in a moment of the EIB's own investment survey, followed by some really interesting panels and some very, what I believe will be some very inspiring talks. We're going to have an opportunity, and we'll give you an opportunity to ask a few questions along the way. We'll try and work the technology. I'm going to say in advance, bear with us. We'll do a mixture of raising hands and chat box. Our lovely IT colleagues are standing by to help us. We've also got some rather talented young men from Drawalism, which is a really lovely kind of visual commentary on our conference. They're drawing cartoons and animations all along the way, and we'll be asking them to give us a sneak peek of the various things they're drawing. We hope they'll be kind to us and won't do too horrible caricatures, and we'll be posting those at the end of the day and during the coffee breaks as well. Now, that's a bit of context, just to remind you, of course, that if you're not speaking, please remember to mute your microphone. But let's get into the conference. I'm really delighted to ask President Hoyer from the European Investment Bank to open up the conference. Over to you, Werner.
Thank you very much, Sharon, and thanks to all our colleagues at the Econ Department for allowing me to open this important conference again this year. We have just heard from Sharon all the advantages of meeting digitally, but I must confess that I'm still old guard, and I'm really looking forward to meeting you back to Luxembourg, welcoming you here to Luxembourg again next year, and having not only all the intellectual input from all of you and the good speeches and discussion contributions, but also many bilateral talks and side events and a couple of drinks as well. So it's a great pleasure to welcome you to this year's annual economics conference of EIB. I would like to welcome you on behalf of the European Investment Bank, but of course also on behalf of OECD, Columbia University and SWERF, the European Money and Finance Forum. I'm delighted that again the conference is able to benefit from such a fruitful cooperation. When we met last year, we were concerned that Europe was not moving fast enough in its transformation towards a highly digitalized, zero-carbon economy. I think few of us could have imagined the situation that we now find ourselves in. To be honest, most of us 12 months ago would not have known how to correctly spell COVID-19, but nowadays we're all hobby virologists. We know it all. The COVID pandemic has had an immense disruptive impact on our daily lives and on our European economies. In the past months, we have seen an extraordinary and impressive policy response, both to fight the spread of the pandemic and to limit its economic fallout. As the EU Bank, we have been playing our part in that. For example, we were one of the first to fund the R&D activities of BioNTech alongside of many other companies active in the vaccine development, diagnostics, and treatment. And of course, always these are coincidences, because we knew BioNTech very well, because in the years before we already financed their activities in research and development on cancer. And together with our subsidiary, the European Investment Fund, we have put in place a safety net for large, medium, and in particular small companies to complement national initiatives and help ensure that strong companies remain liquid irrespective of where in Europe they are based. And it was necessary to complement the impressive national measures with a European response, because otherwise, in view of the different opportunities and capacities of the member states of the European Union to react, this situation could have easily led to an undermining of the European internal market and the integrity of the internal market. So this response on the European side was urgently necessary. The importance of these efforts notwithstanding, we know that the effects of the virus will be with us long after infection rates subside and the short-term economic shock has passed. While our economists are optimistic that we will see a rebound in GDP growth in the second half of the year and in 2022, the same is not true for investment, which is likely to remain weak for years to come. Another lost decade investment would be, if you allow, a disaster. It would mean a further drain on Europe's competitiveness and a setback in our fight against climate change at a critical point in time. This is why I'm glad that this conference is not all about COVID, but about making Europe smarter and greener in the unfolding era of COVID-19. In a few minutes, you will hear from Deborah, our chief economist, on the findings of this year's EIB investment report, which we are launching today. One of the things I found particularly striking in this year's report is the paradox that just as firms are saying that they need to invest more to stay competitive, they're cutting back on investment. Indeed, there is worrying evidence that the pandemic might trigger not just a sharp dip in investment, but a lasting slump. It is now common to say that the pandemic has made digitalization more important. Here we are holding a fully digitalized conference, unthinkable last year. But it is also what European firms are telling us when we ask them about their investment needs. Many say that the pandemic will affect their supply chains, the products, services they offer, and the need to innovate. Yet only 6% of the firms in Europe say they are going to invest more because of the pandemic. 45% say they will invest less. And this is worrying. At the same time, the results are not surprising. The crisis has left many firms with severe balance sheet issues, in particular smaller ones, and the ones active in sectors most affected by the crisis. As a consequence, many firms face a trade-off between short-term viability and long-term competitiveness. They can either try to reduce the threat of insolvency by deleveraging right now, or invest in their longer-term competitiveness at the risk of becoming insolvent before these investments pay off. For many, the answer to this dilemma is understandably to prioritize short-term viability. Still, a weak recovery in corporate investment could not come at a worse time. Even before the crisis, we were not doing enough to meet the significant challenges we are facing, notably on digitalization and on climate. For over 15 years, we have invested every year around 1.5 percentage points less of GDP, of course, less in research, development, innovation than our main competitors in the US, China, and South Korea. And around 35% of all companies in the EU still make no use of digital technologies at all. Believe it or not, nothing, nada. And in the area of startups, despite all our efforts and recent positive developments, we continue to be light years behind the US and China. Also, when it comes to climate change, massive investment in green technologies, particularly by ordinary businesses, is required. This can no longer be delayed. Yet again, looking just at the effect of the first phase of the pandemic, our economists estimate that European firms could be forced to cut climate investment by between 30 and 50%. All the while, nearly a quarter of European firms we surveyed say that climate change and related weather events have already had a serious impact on their business. Another third report more minor effects. This, I think, brings home quite well the notion that climate change is about much more than ice caps and abstract numbers. It's about jobs, livelihoods, and indeed about the ability of European firms to compete on the global stage. The pandemic has led us to rethink many aspects of our lives. We now need to turn it into a defining moment in our fight against climate change and environmental degradation. And for that, investment in new technologies is key. The International Energy Agency estimates for 2020 an 8% fall in GHG emissions, greenhouse gas emissions, larger than any year-on-year reduction in recorded history. While this may sound like positive news, we need to know that if we want to maintain the global temperature increase below 1.5 degrees, we not only need to avoid a rebound in emissions once the economy picks up again, but a similar reduction every single year from now until 2030. It should be clear that this is not possible without new technologies. What does this mean from a policy perspective? So far, if I may use the comparison, we focused our invention on providing oxygen to the economy. We kept credit channels open like for a patient in intensive care. And clearly, many of Europe's firms will still need some emergency care in the months to come. However, looking forward, we will need to complement that emergency care with support for what may be for firms, many firms, a long and difficult convalescence. We need to make sure that viable firms do not face binding finance constraints. We need to make sure that a healthy transformation process takes place and that firms are adapting to the new challenges of the post-COVID-19 era by investing in digitization and green technologies. What will be critical for this is that we put in place support instruments that are risk observing, such as equity and quasi-equity products. These products will do two things. First, they will help firms respond to the increased investment needs they face. And secondly, repair the damage that COVID-19 has brought upon their balance sheets. Such a strategy needs to be market conform, well targeted. It is clear that prospects for a longer term recovery vary widely across sectors and firms, and it needs to be European. While the crisis has affected us all, the impact across countries has been very different. If we want to avoid the same imbalances to occur that we have seen after the last crisis, we need to address the issue at EU level. With the Juncker plan, we have made very good experience in this respect, and it is worth building upon on this going forward. There is so much we can learn from the experience with the Juncker plan that we should not try to reinvent the wheel, but translate as much of the positive experiences of the Juncker plan into InvestEU, and by the way, also in NDICI. Ladies and gentlemen, allow me one final reflection. The coming years will neither be very smart nor very green if we ignore what is happening around the world beyond Europe's borders. The recent events in Washington are an excellent example of just how fragile our democracies and by extension economies are. And of course, I'm not talking about the very, very encouraging news that came out of Washington yesterday, but because what came out of Washington 2 weeks before. For decades, America was like a bigger brother for our young European democracies. Now that brother is experiencing the greatest political crisis in decades. What is called for now is more than ever support and exchange, whether in the joint fight against climate change, in development cooperation, or in questions of security. We now have the opportunity to tackle these global issues together. For this, however, it's important that Europe no longer hides behind America, as we have done for too long. If we want transatlantic relations to work and the concept of rules-based, enlightened, democratic West to be filled with life again, then Europe must become an ally on equal footing. Strategic autonomy and transatlantic partnership are not contradictory, as it's sometimes suggested. One is a precondition for the other. As the EU Bank, we are already making a clear contribution to the EU's global visibility. We have, for example, not only financed development of BioNTech's vaccine and other vaccines, but we are also supported with the help of the European Commission and the so-called COVAX facility, the deployment of COVID vaccines in Africa, the Caribbean, and the Pacific. And as a European Climate Bank, we do not content ourselves with financing the development of state-of-the-art climate technologies in Europe, but we are actively contributing with our financing to the implementation of the goals of the Paris Climate Agreement worldwide. The focus on developing and emerging countries is not just a question of morality or the values we stand for, but in many respects in our own best interest. For while these countries are struggling with economic and health crises, their security situation has not improved in any respect. Quite the opposite, the pandemic and its economic consequences are likely to exacerbate it. And also when it comes to climate and environmental protection, it would be presumptuous to believe that we can get a grip of the problem focusing on Europe only. More than 90% of global CO2 emissions are produced outside Europe. An effective EU climate policy, therefore, cannot and must not end at Europe's external borders. Ladies and gentlemen, I think there is a common theme here. The severity of the crisis created by this pandemic has made us focus on the near at hand and the close to home. But the effects of this crisis will be with us long after infection rates subside, and the return to what we used to call normal will depend as much on what happens outside the EU as it does on what's happening inside. If we want to maintain peace and prosperity in Europe, we must get economic growth back on track. We must set the course for tomorrow, today already. And we must do so together with our European and international partners. In this spirit, let's get it done. Let's invest effectively in the future. Let's breathe new life into the transatlantic alliance that has served as our cornerstone for peace and security and prosperity for decades. Ladies and gentlemen, I welcome you again to this conference, and I hope that through these discussions, we can help that positive vision a reality. Thank you very much. Great success.